You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen. His website is thegoldandOilGuy.com. Welcome to the show, Chris.
Hey, thanks for having me, Jim. How are you doing today?
I'm doing great. What about yourself?
Good.
Oil, you said, is looking like it wants to make some kind of a move right now.
Yeah, crude oil it's been on a tear here the last about month, and we're testing some key resistance zones, which are some overhead resistance from we had in February, and we've got this key resistance line in the sand around the $54 per barrel mark for Brent crude oil here. And if it can break that level and have a close above there, this will be the first real short covering rally. There's a huge net short position in crude oil, and when we break this key resistance level, we're going to see the shorts start to cover, which means they have to buy back their positions. And not only are those people going to be buying back positions, but a lot of the other speculative traders and investors are going to start piling in because it's going to be breaking multi-month highs, key resistance. We're going to get probably a very sharp rally here. Might only last a couple weeks, might only bring us up to the $65, maybe $75 per barrel mark. And then I think we're probably going to see it get hit again. It's just going to be a short-lived rally. There's some good money to be made, I think, going forward here. But once that initial pop happens, I think it's going to fizzle right back out. We're going to see probably crude oil pull back down to the 60 range and flatline for quite some time here.
What about analysts who are saying that all the excess crude is being stored and those storage facilities are very close to capacity?
Yeah, I think there's still going to be a big wave of investors and traders, short-term traders, that are going to be having to cover their shorts, and really that's where we're going to see the equilibrium. Once the short rubber rally kind of explodes to the upside here, I think we're going to see everybody finally kind of catch on and be okay. Price is going to fade back down. It's going to trade sideways for a long time, for months to go, until this reserve kind of starts to get burned up or it gets used, really. But I think this is more of a short-term trading opportunity where we're going to get a pop, a run in value, a significant run, and then it's just going to roll over, fizzle out, and it's going to trade sideways, down in the $60 range for a while.
Any sign that producers are cutting back right now?
I think there's a lot of producers cutting back. Obviously, they don't want to have to be pumping it at a loss, and it really depends on the company on where their stance is, how big they are overall. But there is a ton of supply out there. I think a lot of people are expecting crude oil to bounce back fairly quickly. So I think a lot of companies are still producing, hoping that it's going to come back, but who knows how long they can hold on for before they just say, we've got to stop, we can't afford to do this, or they run out of funds to be able to store it because it costs a lot of money to store it.
Apparently all these old oil tankers are being used for that purpose.
Yeah, big oil tankers just floating out there full. But again, the way I see crude oil here is going to be a short-term trading opportunity where we're just going to see a short squeeze, price was going to rally up, and then it's going to fizzle back down, and we're going to have to wait until all this supply of oil starts to get used.
What about the disconnect there seems to be between the price of crude and what you pay at the gasoline pump?
Yeah, they sure don't follow really in sync together. You think with crude oil, falling 50+%, you'd think gasoline prices would fall the same, but you don't see that at the pumps. Our where I am here, our gas prices dropped about 25% in value. That's about it. You think you'd see a significant drop, but really we haven't seen any of it. The end user just really gets the screws put to them. We just have to pay a premium constantly.
Is that because major consumers like China are snapping up all they can find?
I'm not sure if that really has too much to do with it or not. I really think it's the big corporations, all those middlemen. They're used to making these nice big margins, and they don't want to lower the price. When the price falls, they make even more money. I think the corporations themselves, in the process of making gasoline, are extremely greedy, and they just don't want to lower the price and pass it on to the poor gas station attendant. He's letting, there's going to keep the attendants paying full pop for the gas and more or less hold all of us users of gasoline hostage, more or less.
Yeah, I heard an interview with a gasoline retailer who said when the prices were around $1 a liter, he hadn't seen business that good in 10 years.
Yeah. Yeah, the lineups, when crude oil was falling, we had gas drop pretty low. It was on the radio, the cheapest gas station around. It was pretty interesting. You drive by and the lineup is just incredible. It's funny how people line up over a couple pennies or a penny less than somewhere else. If you think about it, it's, in the grand scheme of things, it's not a huge deal. People will wait 45 minutes to fill up their car to save, $4 or $5. It's crazy. It's, in the grand scheme of things, it's, people are, they watch the price of gasoline more than anything else, and really it's not a huge factor for the average person, but it's highly watched.
Well, that's because the price is right there on the roadside every day, so you can pay attention to it, whereas other prices, say in the supermarket, there isn't a big marquee, with a steak index right there telling you how much it costs every day.
Yeah, exactly. Well, the way the crude oil chart is set up here, it looks as though it's on the verge of starting a rally. And of course, we're going into the season. Typically, crude oil is weak January, February. And then March, April, May, we usually see crude oil prices rally on a seasonal basis. And of course, with the chart lined up just like that here, I think we're on that verge where we're going to get a nice pop going into early summer. And then after that, I think crude oil will fizzle out. But there's, we got the seasonality starting to come into play here, and I think it's going to really help fuel the fire, pardon the pun.
We'll have more with Chris Vermeulen right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking with Chris Vermeulen, the gold and oil guy. Chris, you were saying that China and Hong Kong, the stock markets there are moving at a terrific pace. Do you have any idea what's driving it?
Well, supposedly there's around 1 million new trading accounts being opened every week there, and it's just the amount of potential for the population there to start trading and generate income from the stock market, I think, has just created this massive demand. And if you look at any of the China ETFs like the FXI, you can see the huge rally in value. It's been significant, about a 20% jump in only a couple of weeks of the Chinese stock market. So there's big money speculating into that. And then, of course, when you get that many investors or traders starting to pile into those stocks, when that money starts to flow into those brokerage accounts and they start to buy and trade, we're going to probably see a lot more money move into that area in the long run. So everybody's trying to get in position for some pretty strong gains overall. Now, it's been in a pretty flat for a long time, since around 2009. So it's been forming this multi-year base, 6-year basing pattern. It just started to break out on the weekly chart literally 2 weeks ago. So this type of basing, the longer something bases, forms a consolidation, the bigger the breakout. This could be huge. We could see the Chinese, Hong Kong stocks just explode and rally for months and months on end and post some gains that'll probably be mind-boggling. So it's going to be very interesting to watch this unfold going forward. You
also mentioned that it looks like an increase in the value of crude oil has helped power the Canadian and Russian stock exchanges.
Yeah, the resource rich, you look at the TSX, you look at Russia, which you and I spoke about a month ago, how it looked like Russia was starting to form a bottom and how it's heavily weighted with crude. Both the Canadian and Russia, the indices are very strong and they continue to move up. Right now it looks as though with crude oil going to break to the upside, it's going to really fuel those two markets, and we could see them continue to rally here for another month or two and make some new highs for the TSX. And of course, Russia will be running up into a key resistance zone, but overall there's some great upside for the resource-rich countries and stocks, especially based around crude oil going forward here.
How would a person invest in Russia if you thought they were about to take off?
Yeah, there's two main funds for getting into Russia that I follow, which is one of them is the RSX, and it's a highly traded, lots of volume on it. and it trades more or less a basket of the large cap Russian stocks. And then there's another one also, the RSXJ, which are the juniors. So you get to play the more speculative, the small cap Russian stocks. Both charts look very, very similar, but there will be a time when one will definitely take off and lead the other. I think the small caps tend to outperform in the long run, but right now I think the money looks is still very reserved. There's a lot of hesitation to commit big money into Russia right now, and we haven't seen the speculative money roll into the juniors yet. So the juniors are pretty much shadowing what the large caps are doing, but there will be a time when the general public starts to get involved in Russia. The juniors should just take off because it's just the way traders and investors work. They want the most juice they can get. They're not going to take the big caps. They want to go take these small caps and that could, explode and take off to new highs. So once the average Joe gets into Russia, the small caps should take off and lead, and they'll drive it higher.
Do you think investors ignore governments who play political games telling you, take your money out, don't do this, don't do that? The government doesn't care about your personal portfolio, do they?
No, they don't really care about your portfolio whatsoever. And, if you're trading ETFs that are based in Canadian or American exchanges, it's not like you're really investing in the country. It's not like your money's locked in Costa Rica or Russia or whatever. You're just simply trading on an American exchange. So you've got the security of trading countries, but with a click of a button, you can pull your money out and get out at a blink of an eye. So it doesn't really make too much of a concern.
I was going to say money has no respect for borders.
Right.
Chris, thanks a lot for chatting with us.
Hey, no problem. It's great to be here.
My guest has been Chris Vermeulen. His website is thegoldandoilguy.com. This is a copyright presentation on HowStreet.com radio. Our popular YouTube channel is Talk Digital Network. You can find us on Twitter at Talk Digital Net. Comments or questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.